Alphabet shares here up after hours, up just around 4% on the heels of their strong earnings report. They posted revenue growth of 34%, earnings coming in at $26.29, revenue coming in just above $55 billion on an ex-TAC basis, coming in at $45.6 billion. So here to talk about this, we want to bring in Daniel Flax. He's a senior research analyst at Neuberger Berman. And Dan, taking a look at these numbers, the street's very excited about it. You can see it reflected in the stock price. What do you think about the numbers?
Shauna, the numbers look good overall. Core search is getting better, and I think that will continue over the next year as you have industries like travel really starting to open up more. Importantly, YouTube is very healthy, and the Google Cloud platform, which is aimed at their enterprise customers, which is in a period of investment, that is also performing well. So a lot to like here overall.
So Dan, let me ask you about the cloud business, because they're still losing money on cloud, even though they generated $4 billion. They lost about $1 billion when you add it all up. Should we compare them to the Microsoft Azure, or however you pronounce it, cloud business, or is that not fair? Is it not an apples to apples comparison?
Adam, it is fair, because if you take Microsoft Azure or Amazon Web Services, which are bigger than Google in the enterprise cloud business, they're much further ahead, and they are profitable. Google has been playing catch up, if you will, but they're investing aggressively under the leadership of Thomas Kurian. And I think it makes a lot of sense. When we speak to customers, they like a lot of the capabilities that Google is bringing in areas like artificial intelligence and analytics. And so this is a multi-year investment, but I think it's going to pay off in the form of higher revenue growth, and ultimately we'll see some profits down the line.
Dan, when you take a look at these YouTube numbers, revenue there coming in at $6 billion, that was versus $5.7 billion, according to what the street was expecting, up 49% from a year ago. When you take a look at what you think we're going to get a year from now, I mean, how much of that growth is sustainable?
Shauna, I think a piece of it will slow. Obviously, a year from now, we'll have difficult compares, and hopefully we'll all be living in a somewhat more normal environment. But I think if we step back and look out over the next 2-3 years, you have a transformation of how people consume content. You have new ways for artists and content creators to reach their audiences. And so the multi-year secular growth drivers for YouTube remain very healthy in my view. And so, sure, you may get slower growth rates, but they will be healthy double digits in my view for the next several years, which makes this a very attractive platform.
Let's look at another. It's part platform, part company, part everything. Apple. We're going to get their results tomorrow. Are you expecting a surprise? I mean, it seems as if Microsoft disappointed stockholders. Is it possible Apple could disappoint us tomorrow?
I think what we'll see tomorrow from Apple is that they're executing well on their key product cycles, such as the iPhone 12. I think services is going to remain healthy. And what we saw just last week is that even with the pandemic and the difficulties in terms of getting teams and groups together, they've been able to launch a slew of new products, including the iMac and the iPad Pros, and of course the AirTags. So it's about innovation, continuing to reinvent itself. And I expect a solid report from Apple when we hear from them tomorrow evening. But I think, Adam, to your point, all of these companies have different drivers. But if we think about what's going on from a secular standpoint, this transition to the cloud, to mobile, to really this build out of the digital infrastructure, those trends, in my view, remain very healthy.
All right, Daniel Flax, always great to get your perspective here on the show, senior research analyst at Neuberger Berman. We want to recap some of the other big earnings reports that we got out after the bell. Let's first take a look at Microsoft. We saw those shares under pressure today. Now, coming on the heels of pretty strong results on the top and bottom lines, but I think it was the growth in the Azure business has investors a little bit spooked. So revenue for Microsoft coming in at $41.7 billion. The estimate was for $41.05 billion, so a beat there. Cloud revenue coming in at $15.1 billion. The estimate was for $14.9 billion, so better than expected. But on a year-over-year basis, that growth was 23%, so a significant slowdown from what we saw in the December quarter when we saw that growth close close to 50%. So a big reason here why the stock is off just around 3%. Flipping over to Starbucks, another name here under pressure. Mixed results here from the company. Adjusted EPS coming in 62 cents, better than expected. Revenue a bit light, coming in at $6.67 billion. Same-store sales, though, that was a key figure that the street was watching. That came in a bit light at 15%. The estimate for global same-store sales was 17%.